Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, December the 2nd, 2025. We are just in the closing 15 minutes of trading today. Right now, at the time I'm recording this, the stock market has 15 minutes left to trade. It's 1:45 p.m. my time. So it will be interesting to see what these last 15 minutes bring us, because there's been a little bit of back and forth in the market today. Mostly the three major indexes have stayed in positive territory. I know a lot of you watch it throughout the day and you're very well aware of this. But if you look at the intraday chart on any one of these, you can see that things started to the upside and then wavered a lot of back and forth. Now, these are not giant, huge swings. These are not like these, earth shattering. I think right here, the Dow was up 100 and something. It went down to where it was still positive, but not by very much. Went up higher, went down again. I mean, this is a rocky day until about an hour and 45 minutes ago. And then it kind of got somewhat steady on its momentum to the upside. And right now, at this moment in time, close to the session highs. It's not too far off of the session highs today. Microsoft having a good day, up 3.5 points. Nvidia up or $3.50. Nvidia up $1.50. It was up a fair amount more than that early in the day. Applied Digital up another percent, and it's on a nice little run. Amazon up a little bit, but again, it was up a lot more earlier in the day. A lot of companies doing well, a couple not doing so well. AMD, which we opened a trade on yesterday or this morning. A lot of you opened that trade this morning. It's having a rough day, and I'm not certain why AMD is giving up a little bit in the midst of some of the other chip companies having a good day. It looked promising early on for AMD. They opened up about where they closed yesterday, had a nice little run up. Looked like the price of the stock actually went above the 20-day moving average, but then it's downhill since then. I'm going to get really quickly in here, look at a 1-day chart, at the intraday chart. I like the looks of it here on the CNBC website. That's why I go here. But there's a look at the intraday chart. Started out nice, opened flat, moved up nicely, stayed up a little bit, wobbled, and then about let's say an hour and a half into trading, it went down, tried a little recovery, and then it's mostly been down. It's just basically stayed down in this range of $4.50 to $5 negative on the day. Honestly, I'm not worried about it. I'm not troubled. I'm not concerned that it can't come back or that it won't come back. I feel pretty optimistic long term about AMD, and the trade we got into is a little bit more of a long term trade. So it's I don't plan on bailing out of the trade anytime soon. We just opened it up yesterday or this morning. I don't have any concerns about the trade, but we'll of course keep a close eye on it, adjust it if we need to. I just don't think we're going to end up needing to adjust it in any way. I think it's going to be fine. I mentioned when I put on this trade and with some of our other trades that we have open, a lot of them are coming up close to giving us technical crossovers. They could wobble a little bit before that crossover actually comes. I think it will come. I'm very bullish in my sentiment. I'm very bullish going into the last month of this year and into next year. So I think we'll be fine on that. The market's move today, I think, is mostly just a recovery from some portfolio repositioning. Yesterday, the three indexes sold off a fair amount, but I think that was the majority of what you saw happen yesterday was just repositioning of portfolios. A lot of people have tax implications going into the end of the year. They've got to close some positions that are not profitable in order to help stave off some taxes for some profitable positions they closed out. I'm not an accountant, but I know there's always at the end of the year kind of a balancing act on, how do I do this in a way that's going to be most advantageous? How do I get the biggest tax benefit without closing major losing positions? Some people were selling off winning positions because there's an advantage to paying taxes on that for this calendar year versus having to do it in the next calendar year. So it's a variety of different things that can create that scenario. But again, nothing to be real overly concerned with. I think yesterday was kind of a one-off. I think what's happening today, I personally believe is going to be more indicative of what we see um, moving on through the remainder of this month. It's not that we're not going to have some additional down days. I just think yesterday was the one off, and we're going to get more days like today than we are, other days like yesterday. That's just again, I don't have any perfect authority on that. I don't have any magic crystal ball that's giving me insight, and that's just that's based on all of my all of the analysis I do, the market sentiment, just where I think things are going in general. That's kind of what I see happening going into the the end of this year and the first part of next year. So we'll see if that plays out. There's a lot of different things that could happen that could alter that path or change things. So it's there's without a doubt a little bit of a guessing game that takes place in all of this, and we try and make educated guesses as much as possible so that we put ourselves in the best possible position to profit. We are going to go into the last part of this year with um, a number of trades open. I was looking at the portfolio and specifically looking at these. We've got one, two, three, four, five calendar spreads that are open right now. I am probably not going to add a new trade until we close one of these out. I'm really hopeful that by the end of this week, we could be up 10, 11, 12% on the SPY, a couple of strong days of upward movement, and we could easily hit that on this SPY trade. And I'd really like to be able to close one of these trades here before we open any more new trades. It's unfortunate that Nvidia, Amazon, and Palantir, right after we got those three trades open, Nvidia was doing really good, Amazon was doing good, and then right when we opened Palantir, we had that trail off. This long iron condor on the diamond really helped us out tremendously. And our AMD trade is only down a tiny bit, but I think SPY may be profitable enough by the end of this week that we could probably close it. And then that opens up the capital for a new trade next week. And then hopefully through the end of this week, through the early part of next week, we have enough going on that is favorable that we can not worry about. It's not so much about the ability to open a new trade, but if you follow the method that I promote and teach, I usually have somewhere in the neighborhood of 10% of my tradable funds in any one single trade. Sometimes a little bit more, sometimes a little bit less. That's not like a super hard, fast rule. That's kind of a general rule that I run by, is that I don't have more than about 10% of my available tradable money in any one trade. But when you're spread trading and you've got five open spread trades, six or seven is the most I ever like to have, because I want available capital if I ever need to make an adjustment. I want to have plenty of cash on hand, or if in the middle of the week I see a different trade that I want to add, I want to be able to do that. So hopefully we'll close out. Hopefully we'll be able to close out SPY this week and maybe get profitable and get Nvidia, Amazon, or Palantir. Any one of the three we'll see move into profitable territory and be able to close one of those sometimes next week. And then we don't worry about opening two or three more trades before the end of the year. I don't mind going into next year with several trades open, but I don't want to get in a position where it's more of a challenge to open new trades. So we'll keep a close eye on all this and see where we end up. On the triple play side of things, I made an error, and I'm going to fess up. When I make a mistake, I'm going to fess up. I hope you were watching Discord today, because when I opened this trade yesterday on Marvell Technology, I completely forgot to look at when Marvell's earnings report was, and I saw earlier today uh, on I saw it on CNBC's website when I was not in front of the computer that Marvell reports today after the close of the market, which means in about 5 more minutes. So I put out on Discord, if you're at break even or any amount of profit, and you should have been a little bit profitable. I was able to get out of my Marvell trade for about a 5% profit based on where I got in yesterday. And I went ahead and closed it. I think Marvell is going to do well in their earnings. I'm very optimistic about it. I don't feel I have a reason to be pessimistic, but even some companies that have reported really, really good numbers this past month and a half or so, some companies that have reported really, really good numbers have skyrocketed up during the earnings call. And then by the time the market is opening the next morning, they're trading down and they continue to trade down for a little while before getting a bump and getting a rebound. We saw it happen with Microsoft. We saw it happen with Amazon. We saw it happen pretty much every tech company that we have traded frequently in the past. We saw it happen to, with the exception, the one big exception being Google. Google was the one company that reported and then really had a nice strong move to the upside after its report. But the rest of these all, I'm thinking Amazon, AMD, Microsoft, Nvidia did this. It was just kind of weird. They all had an ugly move right after their earnings report for at least a week or two, maybe 3 or 4 in the case of like Microsoft. And Amazon, and now they're back on an upward trajectory to where I don't think we have anything to worry about. I'm not concerned about these companies not doing well. I honestly have no concern of that whatsoever. But it was kind of a weird situation where it got so ugly right after the earnings report. So you cannot be surprised if that happens with Marvell. They have actually managed to stay a little more positive than some other companies and have had a really nice big rebound. They got caught up in that tech sell-off that everybody got into, but they started their rebound maybe a little bit before the biggest part of it last week, and they've had a really nice move to the upside. I guess they were right in there with everybody with the rebound last week, but they've had a really nice move to the upside. They're back up to where they were before that big tech sell-off took place, or at least almost. And like I said, I'm optimistic about what they're going to do with this earnings report, but not optimistic enough that I want to have a bullish directional trade on. So hopefully you got that Discord message and you got out of Marvell. And if you didn't get out of Marvell, instant message me. And if they're going down, if the stock price is going down tomorrow, we've got a little bit of a cushion before we're going to get down here to that 83 strike prices, which is where we need the stock to stay at or above. And it only has to do that until the end of this week. So there's only Wednesday, Thursday, and Friday that would have to stay above there. But, you could see it drop and come down and test 75 again, which we absolutely do not want to see happen. If that looks like it's going to happen, we'll do one of two things. We'll roll the entire trade out a couple weeks in time, or we'll flip it to a bear call spread with a very small difference in the strike prices of the options if needs be. So we're just about a minute and a half to the close. I don't have any. Oh, the only other thing I wanted to talk about briefly, and this will probably take us through the close, is at the end of this week, we've got the PCE numbers. This is a delayed number. So I think what we're getting is the numbers for September. It's the only thing I see on the calendar between now and the time the Fed meets next week that could upset that apple barrel a little bit and possibly, potentially cause the Fed to wobble a little bit on what right now feels like an almost certain rate cut coming. It's not a guarantee, but it feels kind of close to a guarantee right now. At least the betting odds are currently 90% in favor of a rate cut next week. But a really high PCE number on Friday could wobble that a little bit. So we can't get overly optimistic at this point in time, even though the betting odds are right now very strongly in favor. All right, the closing bell is going to hit in just about 15 seconds, but I'm going to sign off just ahead of it. It looks like, unless there's 10 seconds of just absolute disaster, this is probably pretty close to where we're going to finish, a little bit off the session high. on all three of these, but still a solid rebound. And there's the bell. A solid rebound from yesterday, at least a good rebound. Not everything back from yesterday, but a good rebound. And these will continue to settle for maybe a few minutes after the close, but that's a pretty good indication of where we ended up on the day. All right, I'm gonna sign off. Have a great rest of your Tuesday, and I'll be back on around the same time tomorrow to kind of figure out what we're doing for the rest of this week. Thanks, everyone. Bye bye.